Welcome back to The Explainer. Today, we are on a mission to decode the market's hidden language from the ground up. We're going to build a rock-solid structural understanding step by step, taking you from the tiniest data points all the way to massive market movements. Okay, let's dive right into this. The trend is your friend. I mean, you've probably heard this classic Wall Street adage a million times, right? It's famous for a reason. But here's the catch. How do you actually find this so-called friend in a sea of chaotic numbers? The whole goal of our explainer today is to give you a structured map to find and actually ride that trend instead of just, randomly guessing where the market is going based on gut feeling. We're taking a pretty thrilling journey today, going from microscopic market data all the way out to massive market mountains. But to read the real story of the market, well, we've got to understand its alphabet first. And that alphabet begins with the absolute smallest building block out there, the candlestick.
Section 1. Anatomy of a candle. The basic mechanics.
Okay, to build a truly solid foundation, we absolutely have to understand the psychological footprint packed into this single little shape. The thick body you see here represents the open and close prices for a specific time period. Obviously, a green body confirms buyers were in control of the session, while a red body means sellers dominated. But, and this is crucial, look closely at those thin wicks extending up and down. They are a literal picture of price rejection. It's a battle scene. One side pushed the price way out, but the other side aggressively fought back right before the close. Section 2. Reading candlestick clusters, the market's vocabulary. Once you've got a handle on individual candles, you can start mastering clusters. These are what actually signal crucial shifts in market sentiment. Take a look at these two exceptionally powerful patterns. On the left, we've got a bullish engulfing pattern. Notice how that large green candle completely swallows the previous red candle's body? Boom! That is a decisive shift to buyer control. Then, on the right, you have the exact opposite, a bearish engulfing pattern, where a massive red candle completely overpowers the green one, proving sellers have taken the wheel. When you're comparing bullish reversals to bearish reversals, you're essentially looking at the psychology of a massive tug of war. These clusters act as visual, hard evidence of an imbalance between supply and demand. They tell us exactly when the prevailing force, whether that's buyers pushing the price up or sellers dragging it down, is suddenly running out of gas, and the opposing side is violently stepping in. A picture-perfect example of this tug of war is the hammer. As we define it here, it's a single candle with a small body and a very long lower shadow. Imagine a market just dropping, lower and lower, but then suddenly, buyers aggressively step in to literally hammer out a base, shoving the price right back out before the close. So the key takeaway here is context. Seeing this hammer after a sharp decline signifies a massive rejection of lower prices. It's a huge flashing indicator that momentum is shifting right back to the buyers. All right, so we've spent some time looking at these microscopic battles happening bar by bar. But what happens when you zoom out from those individual candles? Because honestly, if you only stare at the trees, you are going to completely miss the forest. It's time to step back and look at the macro picture. Section 3. The Hiker's Market Journey, Charles Dow and the Mountain. Over a century ago, Charles Dow gave us this brilliant analogy. The market moves exactly like a hiker climbing a mountain. He identified 3 distinct movements. The primary trend is that massive multi-year climb. Then you have the secondary trend, which represents the hiker's resting spots. Think about it, a hiker can't just sprint up a steep mountain without taking a breather, right? These secondary trends typically retrace about 33 to 66% of the primary climb. And finally, minor trends. Those are just the daily noise, the tiny footsteps that don't really change the overall journey at all. Section 4. Mapping the market structure. Following the path. So how do we actually track our hikers' progress? Well, we look for highly reliable checkpoints. In an uptrend, our hikers successfully makes higher highs, meaning they reach a higher peak, and higher lows, meaning their resting spots are getting progressively higher up the mountain. As long as that happens, the trend is perfectly intact. But in a downtrend, our exhausted hikers start slipping. They start making lower highs because they just can't reach the previous peak, and lower lows as they tumble past their last resting spot. That is the map. When you zoom out to look at a real chart, this progression becomes incredibly clear. On the left side here, you see the structured stepping stone progression of higher highs and higher lows forming a solid bullish structure. Then, on the right side, it shows the bearish structure, with lower highs and a dramatic lower low breaking downward. This right here, this is exactly where you stop looking at individual candles and start looking at the mountains they form. Section 5.
Spotting exhaustion and reversals when the hiker slips.
Because look, nothing climbs forever, right? Real trend reversals happen in very specific structural steps, largely driven by big institutional money. Step 1 is exhaustion. The hiker pushes up but completely fails to make a new higher high. Step 2 is a change of character. This is where the price actually starts slipping past the previous resting spot, indicating a severe shift in sentiment. And finally, the break of structure, confirming a definitive lower low. This break is your major, undeniable signal that the smart money has changed direction.
Bringing it all together, mapping market structure reveals crystal clear entry zones. By tracking these pivots from the initial high down to the higher low, and then spotting that critical break of structure, you effectively filter out all that random intraday noise. You're no longer just emotionally reacting to every single red and green candle that flashes on your screen. Instead, you're patiently waiting for the structure to reveal the trend. Which brings us to our final thought for today's explainer. Next time you open up a chart, will you just see a chaotic mess of red and green candles, or will you see the mountain? You've now got the foundational tools. You know the alphabet of the candlesticks, you know how clusters warn of momentum shifts, and you know exactly how to map the hiker's journey using Dow theory and market structure. The map is right there in front of you, waiting to be read. Thanks so much for joining me today, and keep learning.